And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. It is Wednesday, September the 22nd, the first day of fall, and fall has certainly fallen hard here in Chicago. Yesterday seemed like it was about 80 and very humid outside. Today it feels like it's about 50 and raining. So a fast move into fall here in Chicago. I'm John Hoagland. As always, thanks for trusting me with your time. We're going to be looking at context, risk management, and infinite patience today. Expectations and emotions run high on FOMC day. Stay calm. Think risk first. Even think about missing it. Odds are we're going to miss some trades today. Get used to it. You may surprise yourself and find something better as the day goes on. As far as news this morning, 9 a.m. Central Time. Of course, these are all in Central Time. Existing home sales, 9:30 EIA petroleum status report due out. 1 o'clock the FOMC announcement. 1:30 the Fed chair presser. Fed Day. There's a lot at stake in this Fed Day today. Just to name a couple of them. Precise timeline on the start of potential tapering. The cadence of tapering, how long it will take to phase it out, insight into future expectations for interest rate moves. Nothing is expected to change until 2023. And will inflation change the timelines on any and all of this? We know we are in a period of inflation. We know the Fed, we know everybody is keeping a very close eye on all that information. So there is a lot at stake in this FOMC meeting. We're going to be, there's a lot of headline risks, and anything can happen, and usually does. And with all of that said, it could still be a big goose egg. There could be nothing that impactful coming from it. I doubt it, but it's always a possibility. As far as crude oil is concerned, it's a pretty big drop in the API last night. They announced a 6.1 million barrel drop, which was almost 3 times what they were expecting. EIA is expecting a 2.4 million barrel drop, but any more than that, and that's going to put us at a 3-year low in inventory in crude. Crude oil, one of our only markets that's opening out of yesterday's range today. A lot of hedging, a lot of wrangling for position before the FOMC meeting comes out today. We were expecting that yesterday. I think we got that. We had some in the equities. Man, we had a banner day for those of us that like to trade reversion trades. It was a range-bound day, giving several opportunities in both directions for some really decent trades. We're going to look at that in the charts here shortly. All right, yes, Spencer. Transitory inflation, yes, of course. Here is the link for the Futures 301 today. We're going to be talking, guess what, about fundamental information. What's today all about in the Fed? Fundamental information. This is a shorter session. We're going to easily wrap it up before 1 o'clock when the numbers come out. And then about 1:05, we'll start the group coaching session. I'm hoping that you'll join me for both. I understand if you're busy and you are trading. We have a couple of good questions. Group coaching is one of my favorite times of the week when I get the opportunity to just sit back and relax and talk trading with traders. And we'll look forward to seeing you there. Okay, VIX, taking a brief look at it this morning, down 7% at 22.67. Dollar index up slightly, back above that $93 yesterday. And the 10-year yield really holding steady between 1.32 and 1.33%. So, that said, let's jump into the charts. I certainly want to be ready for the equity open this morning. So let me get this set up right here, and let's dive in. All right. Starting as usual left to right. With the crude oil, here's the daily chart. Rollover is ended. Expiration was yesterday. Open interest is considered a boost. We lost 10,000 overall. There was 27,000 that expired in the October contract. We added 7,400 in the November contract, and we even added open interest in the next 4 months. So we've got some money coming into this market, coming off that low from yesterday and kind of, settling back in range from the previous day. We're still wrestling with this area. We're still centrally located between last week's low and high, weekly kickoff high and low. We're really kind of settling into an area that it seems like we are in short time frame control. Look at this on the 30-minute chart. How do we know? Well, we tested down to a visual level, a naked point of control yesterday. That put in our low. The market returned higher. We actually closed higher yesterday. Of course, settlement is 70.49. We've got a lot of overnight longs in this market. And where did we just test to? Another visual level. Short time frame traders tend to make the market go to and tend to respect short time frame levels. So we've got some buyers coming in off the open. If these are longer term buyers, of course, then our short time frame longs will continue to get paid. But if there's no business up above this point of control, we may see our longer time frame traders start to get out of some of those overnight longs, trying to save some of those profits. And, of course, before the FOMC meeting. This market is seemingly just cleaning up a lot of unfinished business, unfinished points of control before finding new direction. API, a drop of 6.1 million barrels yesterday. EIA, we're looking for a drop of 2.4 million barrels today. So we're waiting for that information. We've got a gap from yesterday's range. We've got overnight longs. If we can't close the gap, we'll look for opportunities for continuation to a move to the upside because, again, we've still got some unfinished, unchecked. Oh, no, this one is actually already checked. We checked that last week. I'm surprised that I left that on there. Let's take that off. Here's where we checked it right here. All right, so we've kind of finished up some of our business. We do still have some, I'm sure, some visuals down below as well. I think probably the closest one would be last week's high and this previous naked point of control up here above 73. So a lot of this is going to depend on the EIA. I'm going to try and stay patient, even though we are opening out of range and out of balance in the daytime frame. We're still in a kind of an area of balance in a little bit of a longer medium time frame. Take a look at the E-mini S&Ps. Equities are just fascinating these days. Okay, yesterday. What did we talk about in the forecast? We talked about the idea that with FOMC coming out today, we were going to probably be looking at a day where there's going to be a lot of hedging, a lot of wrangling for positions, and probably a range-bound day. We got what we asked for. We lost 14,000 in open interest yesterday. Hey, some people are just going to be getting out before the FOMC meeting. So that makes sense. We had an inside extended trading hour range yesterday. Not so much today. We've looked a little bit below yesterday's range, but we're still expecting more hedging, more wrangling for positions prior to the FOMC. Remember, our equities are like sore toes right now. They are very sensitive to headline risks. Anything else comes out unusual today, there may be some knee-jerk reaction to that. Of course, we're going to probably see some knee-jerk reaction at the FOMC meeting, no matter what happens. And let's take a look at the 30-minute chart here. So look at yesterday. Yesterday was a reversion trader's dream. This used to be my specialty. We opened, we looked higher, we looked lower. Once this range was established, there was an opportunity for a long here, an opportunity for a short here, an opportunity for a long down here below value, and then an opportunity just short of value high for the move back to the downside. There were like 4 or 5 full rotations between value high and value low. What we ended up doing at the end of the day would probably be considered a late spike, but it's not going to be a play today because we are obviously opening well above the late spike. Settlement is here, 43 quarter. We've got almost all of our overnight inventory to the long side, but we're still in range. We're still in value. Stay patient today. We know what is coming out. Anything goes after 1 o'clock, so stay patient. Again, I'm looking for range-bound activity today. It doesn't mean it has to happen. Anything can and will happen. And again, as sensitive as these markets are to any kind of news, anything can change at any time. So I'm going to try and stay patient, wait for the market to establish its early range, and try and work the extremes of that range until 1 o'clock, where I will be flat as a pancake and looking for opportunity as things kind of pan out. I'm going to be a little bit busy. I'll be in group coaching, so we'll probably be keeping one eye on that and answering questions. So this is going to keep me pretty much flat, and I'm kind of glad about it. Again, these days can be very emotional and with really high expectations. Don't have those expectations. Expect to be a good risk manager today. All right, let's take a look at the Nasdaq now. And again, Nasdaq is similar but different, of course. Let's get to the daily. So Monday we drove below weekly kickoff low. We accepted below it in the fact that we settled there. Yesterday, yesterday was resistant up against weekly kickoff low. Again, weekly kickoff low is 15,160. 15,163 and a quarter was our high from yesterday. All right. We have been expecting this area below weekly kickoff low to be very sticky because there was a long period of consolidation in August and late July here. So this is going to be kind of a sticky area. I'm still expecting more wrangling and hedging positions prior to 1 p.m. So without any important headline news before that, we're going to be looking to let the market establish its early range and work the extremes until 1 o'clock, where again I will be flat as a pancake. Yesterday, again in the Nasdaq, another reversion trader's dream. So, we came in yesterday expecting a range-bound day. Well, we got it. The market opened, looked higher, looked lower. Once the early range was established, we got 1, 2, 3, 4 really good full rotations from value low to value high to value low to value high, back down to value low, and then some. No real late spike here. We wouldn't have to worry about it anyway because, again, we're opening higher. We've got a little bit of long overnight inventory here. And we've got, an inbound days, an inside day and extended trading hours overall, maybe a little bit extended to the downside, but is anybody surprised? Stay patient today. Stay patient. Gold. Okay, drop in open interest of 4,600 yesterday. The market is, it says indecision to me. It really just says, the market doesn't have any idea what it wants to do, what it's going to do. Well, it usually doesn't until something happens, right? So we're still in a short time frame controlled area. We're centrally located in last week's range as well as in the weekly kickoff zone here. We've got an inside extended trading hour range inside of yesterday's extended trading hour range. Very narrow range last night. Not a lot of big expectations here before FOMC. Again, expecting hedging and positioning until then. Here's our move to the upside yesterday. We opened with a gap, couldn't close the gap. That says, okay, well, we're going to try and go in the direction of the gap, which would have been the right thing for us to do. We took out a visual naked point of control yesterday. Last night, well, here's settlement to 1778.20. The market really just kind of holding, not any big overnight inventory here, opening inside range, inside value. Stay patient. This market is, again, probably going to be somewhat range bound today due to hedging and positioning due to FOMC today. So again, I'm going to try and stay very, very patient, very, very patient. I know I say it a lot, and I went right into the charts today instead of saying good morning to everybody because I want to make sure we had time to take a look at everything we have to take a look at this morning. I do want to say good morning to everybody, of course, and I will get to that and see if there's any questions and comments that I can answer in a timely manner. The euro. Third day in range. I think this market's waiting for new information. That we've been doing nothing but wrestling and wrangling and hedging all week long, waiting for whatever's going to happen today. We're just kind of holding around last week's low. A lot of anticipation going here. All right, so we are range rules today, which means that while we are in this 3-day range, we're looking to fade extremes until something changes and until something breaks. If we can get outside and accept outside of this range we've been in for 3 days, maybe something we want to look at going with. And we may get the impetus to do just that at FOMC. Until then, I'm really not looking for much. I'm looking for range bound. I'm looking for hedging. Look at overnight. Here's yesterday settlement 117.45. We've got no overnight inventory. Inside extended trading hour and inside regular trading hour session yesterday. Inside value. Patience. It's one of those days where it may just be we're going to have to hurry up and wait to find the better opportunities later on. Take a look at the natural gas now. Okay, I'm going to get to the daily. Still working on formulating how this market likes to work and how I can come up with some really decent weekly kickoff levels for it. Still doing that research. This is a new product for the market forecast, so give us a little time to get caught up on it. We got an inside day from yesterday. Again, a lot of posturing and hedging for today. Let's take a look at the 30-minute because I think we'll get more information out of that. So yesterday we talked about the gap rules. Well, this is actually on Monday. On Monday, the gap rules paid. We couldn't close the gap, so the move in the direction of the gap was good. Yesterday, just largely range bound. Today, we have no overnight inventory. We have no gaps, no runs, no hits, no errors, nobody left. and it is the top of the first here, the top of the second here today. And, there's just not a lot of opportunity, not a lot of direction. We got the extremes here. We've got some extremes here. We left this gap down here. All of this just kind of lends to rotational trade, and that's what I'm kind of expecting before 1 o'clock, because we are all. This is the 10-year. My bad. Here's the 30. So I had a note here that said, yeah, the gap rule worked well yesterday, and I thought I had it on the wrong day. I had it on the wrong product. Oh my goodness! So the gap that we opened with yesterday, we tried to close the gap. We just missed closing the gap. When that gap remained open, that tells us to look for opportunities in the direction of the gap, which would have been the right thing for us to do yesterday. Settlement in the natural gas is 4.805, $4.80.5, and really no overnight inventory, nothing to really take a good gander at here. So again, stay patient. We've got visuals. We've got yesterday's point of control. We've got a point of control here. We got lots of naked point of controls coming off the highs here. There may be an attempt to come up and clean this up at some point, but not expecting that today because, again, 1 o'clock. All right, now let's get to the 10-year. Oh, geez, here we go. Now let's get to the 10-year. Okay. It's getting crowded in here, isn't it? It's really getting crowded in here. I mean, we've got a falling triangle that was getting closer and closer to the apex. We had this trend line here, which we kind of broke down below. I'm going to take this off and look at this more of a falling triangle than a symmetrical triangle, and it is starting to get a little bit crowded in here. We are going to break out of this, whether it involves momentum or sheer attrition. We're holding weekly kickoff low very well. We're holding this trend line pretty well. We got a couple of stabs up above it, but no acceptance above it, so that's why that remains. We lost 10,000 in open interest. Market really just kind of waiting for information, and guess what? It may get it today. Settlement is here, 133.06. Another gap that didn't close yesterday. That's the net gas. That's not what we're looking for. I'm going to have to fix this. What a goof. All right. So settlement here, again, 133.06. No overnight inventory. Really largely range bound. Looking for new information. All right. So, all right, we got through the charts. We got a couple of minutes here. I do want to acknowledge everybody that's here today, and thanks again for watching, being with me. Thanks for coming to the futures classes. Thanks for coming to the group coaching. Always a pleasure. Brian, first in the room, you win the prize. Zarain, Vince, Jorg, Janus, Theo, good morning. Bill, Brett, Drew, good morning. Steve Lee, Joe West, George Adams, Clarence, PK, Jim Wolf, James Sajor, good to see you. Cam, Laura, always a pleasure. Ryan, Frederico, Harry Gordon, good to see you. Daniel, Spencer, Tyson, Nelson, Jason, Don K, Jimmy Decker, Spencer Rhodes. Staying flat today. Market's crazy when Jay Powell starts talking. Boy, you're not kidding. Transitory inflation, right? There's the links for the sessions today. Again, today we're talking about fundamental information. It should be a relatively quick one. It's perfect that it's today. And then tomorrow, a little deeper look into volume and open interest. John Hukal, good to see you. Michael Saunders. Profit target yesterday, getting funded in about 8 days. Good job, Michael. Way to go, man. You came back and sounds like you're knocking it out of the park. We're happy to see everybody's success here. Trading Research, good morning. Ricardo, Fred, Hoag's idea that crude oil is in short time frame control yesterday helped me understand what was going on. Good. My brother Rick, he's texting me that my trend lines are wrong. It's okay. We'll take a look at it. Fred, good morning. Crude opened with a gap higher, but price has traded on both sides of the opening range. If buyers were highly confident, I would expect the opening range to be left at the lows. Absolutely. You know, and don't forget, you know, we've got an EIA today at 9:30 and a biggie at 1 o'clock. Strictly in your opinion, is overnight inventory before FOMC any indicator of insiders getting the edge on direction? All I can say is it might be. We never really know. It's kind of a conspiracy theory, but sometimes it does seem like somebody knows something. But overnight inventory, you know, I don't think we see too much except for in crude oil in any of these markets. Zahurul. How do I determine the weekly kickoff low or high? They are proprietary levels. It takes some time to calculate them. There's technical analysis, market profile information, market generated information, a little math, and a little tea leaves. And I don't tell people how I come up with them. Those are mine. I do give them out in the markets that I do them in. We're going to be adding that nat gas to the list of weekly kickoff levels. Opening range in crude oil is still holding near the low of the day. Buyers may be more confident than I thought. Well, that's always a possibility. I'm going to be chilling until something really comes to me. All right. Keith, good morning. Epic, good to see you. Prophet Eon, always a pleasure. Razor Trades, good to see you. When only an OJ. All right, mostly tea leaves, LOL. Joe West, good to see you. Time for putt-putt golf, sounds like. Hey, just be patient. Just be patient. It's going to be real easy to get chopped up before anything actually happens today. Stay patient. All right. Take your deep breath. Be humble, grateful, and creative in your trading today. I'll see you at Futures Trading 301. See you for for group coaching. And get out there and profit today. Have a good trading day. Stay patient. You know, things may not happen until later on in the session. Next question with Mike Patak. I'm not sure. Usually about once a month that happens. And we'll certainly be letting you know, Michael. Get out there and profit. Trade well today. I'll see you in the pit in a couple of minutes. Have a great day.